So, what we are looking at right now is called the interbank price delivery algorithm, or IPDA for short. So, price has four characteristics at which it can move in. It has either one, consolidation, which would be back and forth movement held in a tight range. It has two, expansion, which would be a run in price, more so one-sided. And then from an expansion, it will either lead into retracement or a reversal. So a retracement would be price returning back into the range created after the expansion, retracing into it, and then continuing the momentum. A reversal would be price expanding and then reversing. So everything begins with the consolidation. So if you have a consolidation established, next you are looking for an expansion, and then after that expansion has taken place, you're looking for either a retracement to continue the expansion, or you're looking for a reversal to continue the expansion. So is everybody on the same track? And now following along with quarterly theory, you can typically see these properties take place from quarter to quarter to quarter to quarter. Each quarter, say Q2, will look back on Q1, but also look forward on Q3. So a quarter can look back, but it can also cast forward, which is very important to note because you guys will be learning a concept this month that explains the cast forward. Hint, hint, nudge, nudge. But viewing back on what the previous quarter did can give you insight on what the next quarter or current quarter is likely to do and how it will function. So that is where AMD X and XAMD, that's where that was originated from. So that's why in Q1 you commonly see accumulation, which would be consolidation. Q2 you likely see expansion, and then Q3 you either see a reversal or retracement, and Q4 either a reversal or retracement depending on what Q3 did. So each quarter can look back, but also cast forward. So looking at the NASDAQ on the 15-minute time frame, at the bottom here we have the daily cycle. As you can see, Q2 of the daily cycle was a consolidation. Whenever Q3 opened up, we ran above Q2's high, creating a stop run, and then expanded away, and then Q4 opened up and we made a retracement and then continued on the basis of what Q3 did. So your best expansions and reversals will take place after stop runs have occurred. And now we're looking at the euro. As you can see, 15-minute time frame on the daily cycle. Q2 was a consolidation. Q3 opened up, made a stop run on Q2's low, and then expanded. And then once Q4 opened up, we made a retracement into a gap, and then continued the basis of what Q3 did. So Q4 is not always a reversal. Sometimes it can be a retracement like this. It depends on, number one, the time factor. So looking back at the previous quarter and forecasting on the next quarter, the time factor, along with what the previous quarter did in regards to narrative. And some of you are probably asking, what makes a high probability consolidation? Since you said everything begins within the consolidation, and you're picking Q2 for some of these consolidations. If you look right here, we have Q1's high, and we also have Q1's low. As you can see, in Q2, which would be the London session, we stayed within the range of Q1 and then opened up in Q3. So we have buy side liquidity resting right here at Q2's high, and sell side liquidity resting here at Q2's low. So price went in, took Q2's low, expanded, retracement, and then expansion higher once again. And now we can do a bit of Q&A. Hello. I am currently unable to hear him. Or her. Let me view my settings in Discord. Can you speak again for me?
Okay, can you hear me
There
now?
we go. Yep, got it.
Okay, so my question was, so when it comes to AMDX and XAMD, does Q1 predicate off of Q4?
Short answer, yes.
Okay.
But under certain circumstances, and we will dive a little bit deeper into that. But yes, what you're seeing right here is yes. Q1 can look back on Q4 to gauge information. And if you view today the 90-minute cycle between the NASDAQ and the Dow, specifically the 90-minute cycle within the daily cycle on London session and the New York session, there is Q4 of the 90-minute cycle and Q1 of the 90-minute cycle, so the two sessions overlapping. You will see something there between the two assets that will probably be what you're looking for. So let's say this is London or Q2 of the daily cycle. And then Q3 of the daily cycle opens up right here. So this is Q4 of the 90-minute cycle, Q1 of the 90-minute cycle. If you compare these two quarters in regards to the highs and the lows, you will see something there.
Okay, because that's what I was thinking, that if you looked at Q4, you could tell Q1 if Q1 was going to be an X, whether it continued from Q4 or if it was going to be an A. So it would make it easier then you know that, okay, so Q1 is an A or Q1 is an X and Q2 is a A and Q3 is an M and Q4 is a B.
That's a very, very good observation, yes. But if you look in the chart, and somebody put in the chat even, you will see that is what somebody else put. That pretty much will give you the answer you're looking for.
Okay, thank you.
You're welcome. Can you talk about the last presidency 4-year cycle and how they condition the market via the monthly time frame in the Forex triad, or is that too much? We're just focusing on more so the easier cycles to find things to do in. Because I don't think we've even covered the quadrennial cycle. And then there's even one more above that, the 16-year cycle. What is the difference between manipulation and distribution? So manipulation will typically be contrary to the overall trend of the market. So if you're, let's say there's buy side liquidity resting above the market, and price has been slowly tipping its way up. Manipulation would be after a short consolidation, there would be a run below those lows before the true move higher to that target. So this would be the manipulation, and this would be the distribution. Manipulation is driven by a red folder, typically, right? Yes, you would be correct. So red folder news days, and this is a part of why I explained on Sunday that red folder news days are generally higher probability. So we can predict what the move of the news would be with this. So this is pretty much the foundation, and it is a core understanding of what you need to know before you actually learn the concept that will allow you to know what news will do more times than not. So this is pretty much the behind the scenes, if you will, of why certain things will work for what you're going to learn later on. Can you go over your model? I don't think I could even translate it. It would be too many things that we haven't covered yet, and it would be very, very, very confusing. We will not be talking about PSPs as of right now, even though they've been the hot topic recently in the chat. First, you guys have to get through the boring stuff, like this, because you have to understand the boring stuff and the true functions of price before you can learn the other things that are going to be brought later on. You have to slowly work your way up in there, because something that happened in the 24 group is that a lot of things got brought on way too quick and way sooner than they should have. So a lot of people were very, very, very confused. And for the person asking about the weekly cycles as the higher time frame and using another cycle, no. Sometimes when I'm trading New York session, for example, and we're trading within a higher time frame gap, I want to see manipulation, but instead only get expansion, and I miss the move, only to look back and find that the manipulation was created in Asia and London. So my question is, how does one know if manipulation has occurred and it is safe to enter? And that is a good one. But yes, what you were talking about is, say, we'll bring this example up once again. Let's say we think the market's likely to draw higher to buy side liquidity, and then we already form a manipulation in London session, and then New York session opens up. So say this is so let's say this is the daily cycle right here. So Q1 is Asia, Q2 is London, Q3 is New York. Pretty much what you're saying is, how do I know that this manipulation before the run higher is a true manipulation, and how come New York won't run down there one more time before continuing higher? Typically, this will happen on days without news. This is one of those characteristics. But generally, more times than not, Q3, which is the New York session, New York morning session, more times than not will form the higher low of the day. So this is more uncommon to have London be the higher low of the day. Generally, it is the New York AM session. But if there is a lack of news in the morning session and the London session has already manipulated either above or below, in this case it would be below since we're bullish, below Asia's lows, and then you can see prices already expanded away, you can likely either look for something to do on a lower time frame within here to confirm the run higher, or you can enter within the range and then have your stop set at London's higher low, targeting that buy side, if you have another thing of confirmation on the lower time frame within here. So does that make sense? But this is uncommon. New York AM session is where you want to see higher low of the day form. Yes. News will typically run the stops one more time. And we'll call it stop runs for now, because it's something else, but right now it is stop hunts. If we reaccumulate in Q2 inside of Q1 range, can we expect Q3 to expand? More times than not, yes. Have you backtested and seen for how long quarterly theory concepts have been working? They have been working for a very long time. But recently, from what I've seen, they've been working a whole lot better. And for somebody that asked, I remember earlier on the week, somebody asked if these concepts do get out, say even ICT traders, or these concepts itself, won't that have an impact on the market and make it to where they work less? And if anything, it would just induce more liquidity into the market, making it work even better. So in these recent years, we've seen it work a whole lot better just because there's been a whole lot more liquidity induced into the markets, or I'll call it volatility. Could there be 2 quarters of just consolidation? Yes. An AAMD profile does exist. So that's why it's important to trade on days with only red news folders, because you know there will be a level of expansion that does take place in at least one of the quarters throughout the day. How have you found price action in January? So far, I think I would give myself 85% accuracy. Some of my people, they might disagree and say a little bit higher, but personally, I'll give myself an 85%. And no, before anybody asks, yes, I do have a group, but it is closed, so do not ask me about it. So I think we're going to go ahead and wrap this one up shortly. So if anybody has any last questions, this would be the time. You will learn that later on. Don't worry. It's coming in the future. Guys are asking me too many questions of things that I wish I could answer. I wish I could answer them. Because those that have been with me for a while, you guys know that once I get started on Q&As, it's difficult for me to stop. I wish I could answer them, but not right now. You guys aren't ready yet. Does the market structure shift or change in the state of delivery concept apply in quarterly theory? Yes, but only if time is right. The market has to tip its hand before you can bring those concepts into the equation. Can you talk about the curriculum structure? We're going to take it pretty much month by month. So we're going to release a concept, stay on it for a month, and then release another concept, stay on it for a month. We're going to do it on a month by month basis to where everybody's on the same page and everybody can follow along and follow through. But the best learning experience will be from you seeing it being called before it happens, number one, and then getting an explanation on how the person telling you where it was going to go beforehand got to the conclusion with the concept that they shared with you. That is where your best learning experience will come from. So give it a little bit more time and you guys will see. What is the best time frame to verify consolidation quarters? It depends on the time frame associated with the cycle. Yes, daye will be coming on more. So don't worry about that. Can you tell us what cycles and time frames are related? I wish I could. But remember, we're still in week 2. We should be coming out with that information very, very soon. And it's not like I'm trying to withhold information because you guys did pay for this. It's just, I was told, take things very, very, very slow. Because we have to get the basic stuff out of the way first and get everybody on the same page before we advance to the good stuff. Because right now we're not even in elementary school, we're still in preschool. But yes, you're welcome. And yes, I will speak with you all again sometime next week. I'll probably do another live stream. So hopefully you found this one insightful. Wherever you are, have a good morning, good night, good evening. I will speak with you all again shortly. Good luck and have a good rest of your weekend.